Poll taxes have a long and controversial history, serving as both a revenue source and a tool for voter suppression. In the United States, they were originally a common form of taxation, levied on individuals regardless of income or property ownership. Colonial governments relied heavily on poll taxes, with Massachusetts collecting up to half of its revenue this way. As the country expanded, property taxes became more dominant, but poll taxes remained in use, particularly in the South. After the Civil War, poll taxes took on a new role, not just as a tax, but as a deliberate barrier to voting. Southern states, eager to maintain white political dominance, introduced poll taxes as part of Jim Crow laws. These taxes required citizens to pay a fee before registering to vote, disproportionately affecting black voters and poor whites. Some states implemented cumulative poll taxes, meaning missing payments from previous years had to be paid before voting, making it nearly impossible for many to participate in elections. To ensure white voters were not affected, states introduced grandfather clauses, allowing those whose ancestors had voted before Reconstruction to bypass the tax. This effectively excluded most black voters while protecting many white ones. Poll taxes were not exclusive to the South. Northern and western states, including California, Connecticut, Maine, Massachusetts, Minnesota, New Hampshire, Ohio, Pennsylvania, Vermont, Rhode Island, and Wisconsin, also had poll taxes at various points in history. However, their use in the South was particularly insidious, as they were designed specifically to suppress black voters following the passage of the 15th Amendment, which granted voting rights regardless of race. According to the U.S. Department of Justice, voter turnout among black citizens plummeted in states that enforced poll taxes, solidifying their role in suppressing electoral participation. Efforts to challenge poll taxes gained momentum in the early 20th century, with activists arguing that they violated democratic principles. Some states abolished them voluntarily, but others held firm. The fight against poll taxes became a major civil rights issue, culminating in the passage of the 24th Amendment in 1964, which banned poll taxes in federal elections. However, some states continued using them for state and local elections until the Supreme Court ruled them unconstitutional in Harper v. Virginia Board of Elections in 1966. The ruling cited the Equal Protection Clause of the 14th Amendment, declaring that wealth should not determine access to the ballot. Poll taxes had also played a role in English history, most notably in the Peasants' Revolt of 1381, when a uniform tax on individuals led to widespread unrest. In the U.S., their use was tied to agrarian unrest in the late 19th century, when political competition between Democrats and the Populist Party led to efforts to suppress black voters. Once the Populists were defeated, Southern Democrats amended state constitutions to include various disenfranchisement measures, including poll taxes. The Library of Congress has documented how these laws disproportionately affected tenant farmers and laborers, further solidifying racial and economic inequalities. But before Jim Crow, poll taxes were used for more than voter suppression. In colonial America, they were a primary source of revenue, particularly in the South. Even after independence, local governments continued imposing poll taxes, sometimes alongside occupational taxes that disproportionately affected tradesmen rather than wealthy landowners. During Reconstruction, some states directed poll tax revenue towards education, but as congressional Reconstruction ended, poll taxes gradually increased, eventually becoming a prerequisite for voting across the South. Beyond elections, poll taxes had economic consequences that extended into everyday life. The National Archives has records showing that in some states, failure to pay poll taxes could restrict access to basic services. In certain areas, unpaid poll taxes could prevent someone from obtaining a driver's license or business permit, effectively limiting economic mobility. This financial burden disproportionately affected the poor and reinforced systemic inequality. Poll taxes were often paired with literacy tests as additional barriers to voting. According to the U.S. Department of Justice, Southern states combined these restrictions to make voting nearly impossible for black citizens. Literacy tests were intentionally complex, requiring individuals to interpret obscure legal texts or answer arbitrary questions. Election officials had full discretion in grading the tests, frequently passing white voters while rejecting black voters, despite identical answers. Some states also implemented voucher systems, requiring new voters to be vouched by someone already registered. This prevented even those who could afford the poll tax from voting unless an existing voter verified their eligibility, further excluding marginalized communities. The abolition of poll taxes marked a significant victory for voting rights, but their legacy remains. The U.S. Supreme Court, in later rulings, noted that financial barriers to voting continued evolving in different forms, such as voter ID laws and registration restrictions, often disproportionately affecting marginalized communities. While poll taxes are gone, their impact on American democracy lingers, serving as a reminder of how financial barriers have been used to shape political power. Thanks for watching. Please like and subscribe. I'll see you next time.